R.S. Butola, former chairman of IOC. In a minute, we will also be joined by Virendra Chauhan, the oil analyst at Energy Aspects, but that on the global oil prices. But first to you, Mr. Butola. Given that diesel prices hikes were absorbed without too much of political resistance, do you think that oil marketing companies should be allowed to make a minor profit? What, according to you, should be the government's stance? Generally allow free up diesel prices and allow for a minor profit?
I think as far as profit is concerned, my view would be that we should be transparent, and whatever is the extra profit, it should generally be passed to the consumers, barring short periods, because the oil prices keep moving, and if the view is that the oil price is going to again rise by some margin, then there may be reason not to decrease the prices. But as of now, I understand that because of the election notification, etc., perhaps that could be the reason what has been reported in the media also. But my own view is that in a medium to long-term basis, whatever benefit comes in terms of price reduction globally, it should be passed to the consumers, and that is the practice which the oil marketing companies have been following, both for petrol, which was deregulated much earlier, and should follow for diesel also in times to come.
Actually, Brent is falling pretty fast. 10 minutes back, it had just dipped below the $92 per barrel mark, and now it's gone sub 91 as well. Good morning, Mr. Butola. Can you tell us what the sensitivity is of oil marketing companies to, a profit, say a 1 rupee profit, on diesel? So, for instance, right now we understand that, OMCs are making a 3 rupee profit on diesel realization. So, how much does it benefit a company like IOC?
Look, the diesel consumption in the country is around 68-70 million tons, and if you multiply that by 7.5, that takes you to 450 million barrels. So you can multiply, if there is 1 rupee benefit, you are having 450 million multiplied by 7.5. So that makes a huge difference to the diesel prices. And diesel has been the most profitable. But let me remind you, it's not the sheer number that the diesel prices are coming down, because as far as the oil marketing companies are concerned, absolute prices hardly mean anything for them. The prices could be way high for diesel internationally, and if the cracks, because the oil marketing companies work on the basis of refinery margin, the cracks, and if the cracks are high, in spite of very high prices, etc., the oil marketing companies will make good profits. But if the prices are down, like you are saying, crude prices 91, and now I hear there is a crack of only $10-11, which is very low on the diesel. Generally, it should be $18 to $20. I mean, when you can say that the oil marketing companies will have good profit on diesel. So the worry is that low prices, in terms of absolute numbers, they don't mean much for the oil marketing companies, unless the cracks, the difference between the crude oil price and the diesel price is high.
Okay. Unlike diesel, we did see some bit of resistance for LPG price cylinders and the effort of the government to cap the subsidy on them, first to 8 cylinders and then at 12 cylinders. What do you think should be the approach? Should the government take the diesel approach and bring market prices higher, or rather the subsidized prices a little higher, or should it follow the Aadhaar approach and go by restricting the number of cylinders? What, according to you, is a more sensible approach to LPG?
Let me just, in order to show you or show your viewers the impact, the 50 paisa increase per month in diesel meant reduction in the under recoveries by approximately 28 to 30,000 crore last year. And because the way the consumption in the country is, this is the highest consuming fuel in the country. And if you go on by 50 paisa, there will be reduction of around 25,000 crores per annum minimum. So that's the impact. And if you calculate for LPG also, I just working, if you increase the LPG domestic cylinders price by 10 rupee per month, you get an average of 60 rupee per year. and there are around 100 crore cylinders which are sold every year. So 10 rupee reduction will reduce the under recovery on diesel by 6,000 crores. And the consumption, average consumption of LPG cylinder in an average household is 7 in a year, which is less than 1 cylinder per month. So 10 rupee if you are increasing, and even if it's 120 rupees at the end of 1 year, to my mind, in the overall budget of average household, it's not going to make much difference. So my recommendation would be that we have to go for the dual approach, both the Aadhaar, because that worked very well when we were implementing this. The system works perfectly, and we were able to see a very large number of accounts for direct subsidy, direct cash benefit to the LPG consumers. But I would think 10 rupee, 15 rupee increase on the lines of diesel would do a lot of good in terms of reduction of the under recovery on diesel on LPG also.
Okay, Virendra Chauhan, oil analyst at Energy Aspects, also joins into the discussion. Hi, Virendra. IMF has lowered the demand forecast, for various countries as well as the global growth forecast. How are you estimating demand over the next 12 months?
There's certainly been a slowdown in demand over the course of the third quarter of this year, and we expect that to remain. Now, part of those reasons are seasonal, so at the moment September and October sees 6 million barrels per day of refining capacity offline, so naturally that reduces demand for crude seasonally. But then the other transition which has gone on the demand side of the oil market is more structural. A number of countries, India included, China, and particularly Southeast Asian economies, so that's the collective demand from centres of growth such as Indonesia, Thailand, Vietnam, Hong Kong. All of these countries, we're seeing a transition or efforts being made by the governments to transition away from investment-driven growth and to consumer-led growth. Now, that's causing a slowdown in the oil market in the short term.
Okay. Actually, Virendra, can we concentrate on the supply side? Delineate for us the impact of shale gas. Is that leading to an oversupply situation for energy products in general?
So what's happening is we've seen 3 years of production growth from the US at 1 million barrels per day. What that has meant is a reduction in imports by the US. But what it has done is created a change in trade flows. So historically, Africa used to send, or at least at its peak in 2007, Africa was sending 2.7 million barrels per day of crude to the US. That number in the year to date has fallen below 500,000 barrels per day, even 0.3, 0.2 million barrels per day. So what this has meant is that at Nigerian grades such as Angola, Nigeria, Algeria, they're all having to swing east towards Asia. Now, as demand has slowed in Asia, what's happened is we've created a glut of crude in the Atlantic basin, and that's what's weighed on the price of Brent through the course of the third quarter and into the fourth quarter.
Saudi was expected to hold production. With Saudi cutting, do you see a series of price undercutting and hence, lower prices?
We certainly expect lower prices to exist for a while now, at least compared to what we've seen over the last 3 years, where prices have averaged $110 per barrel on a consistent basis. We now think that we may be closer to 90, at least for the current quarter and the first half of 2015. And you rightly suggested that Saudis cutting their OSP was a trigger for lower prices last week. Now, that's part of a broader transition which we think is going to occur. I think the market has always assumed that Saudi Arabia will take on this role as a swing producer, in the sense that it will defend prices at $100 per barrel by cutting production. Similarly, on the upside, it will raise production in order to keep prices in check. Now, what we think is there's a transition in place where Saudi Arabia is saying, okay, if we are to reduce production, then we want to do it in consort with the rest of OPEC. So that means that the likes of Iraq and Iran and other OPEC members such as Nigeria and Angola also have to reduce production in consort and not rely solely on Saudi Arabia to reduce production. So that is certainly a bearish factor in the short term, yes.
Okay, given that you are delineating bearish factors both on demand and supply, what is your price forecast in this quarter, 2014, in 6 months and in 1 year for Brent crude?
So over the next quarter, we're forecasting oil prices at $92 per barrel. If you look at that, is a significant down, almost $20 lower than what we've experienced over the previous 11 quarters. We expect that to remain the case over the first half of next year. So we're forecasting between $90 and $95 per barrel over the first half of next year, and then we see a pickup in Q3 15 and Q4 15 above $100 per barrel. But average across the year, based on current supply-demand fundamentals, we're forecasting around $100 per barrel for Brent in 2015.
Virendra, one final question to you. How are you forecasting LNG prices, especially in Asia, say Qatar and the other Asian countries? How would LNG prices move?
So I think towards the back end of next year, we've got Australian projects coming on stream, and then further out, we've got US projects coming on stream. Now, if regasification terminals don't come on at the same pace, then we're certainly going to enter a period of oversupply and therefore downward pressure on prices.